Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 26th of October 2018, and we will be starting off with the S&P 500 E-mini futures market as usual. So over the past week, we witnessed this market continue to be very, very volatile, and that volatility seems to be favoring the sellers for this market for now. If you recall our analysis from the prior week, we've been talking about how this entire drop here, this sharp drop here, we said could potentially indicate the fact that the market was trying to maybe enter or hit an area of support and resistance, such as this one over here, the 2700 area, and look to potentially bounce back up. But really that never happened at all. We did see an initial bounce above the 2700 level over here, and then the sellers have just been very strong here, allowing prices to just continue to push lower. In fact, this entire drop here in the month of October not only makes the October the worst trading month for this market for the year, it also actually was enough to allow price for this market to drop into the red for the year. So this market, as of now, is actually trading into the red, which is surprising given the fact that for the most part of the year, we've actually been uptrending here pretty smoothly. In fact, just at the beginning of October, we had the market pretty much hitting all-time highs around here, and that was the point where we said that if this momentum continues, we would potentially like to see this market hit the 3,000 big round number as a mid to long-term target. But this turnaround here really has made a lot of changes to that perspective, and I'm sure for the perspective of all the traders and analysts looking at this market at this point. Interestingly though, even though that we see that this entire down move here seems to be a good 61.8% or more retracement into the uptrend, if you look at this low over here and the swing high over here, we're still looking at volatile price action here that is still not strongly bearish. I mean, of course, we're seeing price continue to push lower here, but if you look closely, we're actually looking at a lot of candlesticks that are leaving wicks to the downside, which suggests to us that even though price is trending down here and it's just very volatile but bearish, this may still not be or this still doesn't reflect a truly bearish market for us. So for example, conversely speaking, when the market was actually uptrending, we had a lot of smooth price action unfold here. We saw continuous higher highs and higher lows here, suggesting that the market was trending up smoothly, and there wasn't a lot of volatility in this area around here. However, this entire move towards the downside, we're seeing a lot of whippy price action and a lot of candlesticks that have very large ranges on them. But the close doesn't appear to be as strong, minus of course this really large candlestick towards the downside here. But if you look at the other candlesticks, so for example, the one prior to this one, we had a very large wick on this candlestick over here. In the last couple of days of trading, the prior week, we again saw that same action where the market's now leaving wicks on the candlesticks towards the downside. So that to us suggests that the market here may have something in store in terms of bullish trading activity as it hits the 2600 support level. We would still classify this as a market that's extremely volatile and is dropping very, very hard towards a potential price level that may actually trigger some buying to come into the market. Once again, the US economy, which this market usually mirrors, continues to be very strong. There's still no major indications of a US economy slowdown at all, minus some trade war concerns with some of the major global economies. Also past week, the fact that some of the tech stocks like Amazon and Alphabet posted mixed results could also be a potential trigger to all the selling that's coming into the market. Of course, this entire time when the market was actually uptrending for the most part of this year was when the corporate earnings were continuously beating expectations, and each quarter we were seeing better than expected results for most of the major stocks that actually help move this market. But then stocks like Amazon and Alphabet that are supposed to be market favorites, now that they're starting to post mixed results, that's also sort of feeding into the fears here for the market and allowing for investors to actually sell this market as hard as we can see over here. So just going forward into this week, we're looking, if this momentum here continues and the volatility just continues to be as high, we may actually see the market hit the 2600 level over here, and that should be a very, very interesting touch off the 2600 level if the market does that, because looking at all these wicks towards the downside on these candlesticks, this actually could be an attempt for the market to hit the 2600 level where some buying may come into the market, or we should say we wouldn't really be surprised to see some buying come into the market at the 2600 level, just given the tremendous support that the market has found just this year at this level. So we look forward to how things pan out this week. For now, our long-term target for this market for the 3000 round number seems to be quite a long distance away and may not even be as relevant at this stage. So for now, we're just looking for the market to maybe test the 2600 level, and like we said, we wouldn't be surprised if we saw some kind of a bounce or some kind of buying come into the market here at the 2600 level. If it does, though, it'll be interesting to see if the buyers will be able to push price past all of these former support and resistance levels that the sellers are basically carving their way through. So such as the 2700 level over here. Then of course we have the 2800 level over here that's also acted as a major period of support and resistance for the market. So if the buying actually does come in and we see the market trying to reverse this entire move towards the downside of the month of October, it'll be very interesting to see whether and how it basically meanders its way past all these important levels that will then be in the way. Okay, so the next market we're going to be looking at here is the light crude oil futures market, which posted some really interesting price action the week prior. If you recall our previous analysis for this market, we had been talking rather in an excited tone about this rising support trend line over here that we said was supposedly holding the uptrend up in place, and this entire move towards the downside, the strong move towards the downside, we said was paving the possibility of the market potentially breaking this rising support trend line towards the downside. We did actually see that happen last week. As you can see, we had a very strong candlestick, bearish candlestick that closed strongly below the rising support trend line. So there's that initial trigger of a potential breakout play past a dominant support trend line. We also saw some really interesting following price action. We did not see any volatile movements here at all. Instead, we just witnessed low volume, low interest pullback back towards the rising support trend line, which interestingly also lines up with a short-term support and resistance level over here. So you can see we had some instances in the past where price found support at this level, and so it should be really interesting to see whether the market here will be able to hold as resistance at this rising support trend line now, and as well as the support and resistance level that's at a horizontal location on the chart over here. Interestingly, though, even though we're looking at this as a potential breakout play, we're still not ignoring the more longer term or the bigger picture on this market, which is basically dominated by a lot of sideways and choppy movement in the more recent past for this market. So actually, looking at a more holistic, looking at this market through a more holistic view, we're looking at this entire area over here as an area of support and resistance. It's a really thickish zone, of course, that extends pretty much, starts at the $64 level, goes probably all the way to the $67 price level over here. But we've had very obvious instances of price either finding support or resistance within the zone. And so even though we're looking at this market potentially breaking or sort of closing underneath the rising support trend line that we drew just a moment ago, we're still looking at this market as one that's heading into a very, very critical support and resistance zone. So just looking at this last swing low over here, we can see that the market, even though seems to be closing underneath a trend line and sort of replicating what would typically be a textbook breakout play towards the downside, it's actually heading very close towards this all-important swing low. So we're definitely looking out for signs of any kind of major buying coming into the market, and if it does, again, we have no reason to be surprised at all. Just looking at the bigger picture here for this market, but at the same time, we're also looking at this as a potential breakout play past a very dominant looking and very obvious looking support trend line and a short-term support and resistance level over here, pretty much situated at the 67.5 price level. Okay, so next up we're going to be looking at the euro currency futures market, which finally last week showed us signs that it was trying to move away from the 1.16 major support and resistance level that has been, for the more recent past, acting as a very strong pivot for price action. So if we just throw that level around here, you can see that over the past couple of weeks we've actually had some really interesting price action where the market pushed right underneath that price level, the $1.16 support and resistance level. We had a pullback towards this level, which then acted as resistance and allowed for more selling to come to the market. And since then, we've just seen the market sort of trickle further underneath and lower under the $1.16 price level. Now that does make for a very interesting development, but we can't forget that we've had a similar situation in the past where the market did show signs of plummeting very hard underneath the 1.16 level, even for a brief moment in time, indicating that the market may actually be interested in resuming this more longer-term downtrend over here. But that attempt actually just completely reversed itself, and we actually saw the market make a move back past above the 1.16 level. So just keeping history into perspective here, and the possibility that the history may potentially repeat itself, we're still not entirely excited about this move past or further away from the 1.16 level, especially now that we see that the market actually has a swing low over here and a potential area of support for the market as well. So even given the fact that, or given the perspective that the market will continue to be bearish going into this week, we may actually see the market hit this very important swing low over here, and that will be a decisive moment in time for this market, because if we see buying come into the market, we may actually see price action that may be similar to what we saw for this market a little while ago over here, where the market just completely reversed the strong move towards the downside over here. On the other hand, if we see the market actually push underneath this level over here, use it as resistance and continue its way down, that then would be a better indication of the fact that the market may at that point then be looking to continue with its with a more longer term down move over here, and we may actually at that point be confident enough to assume that we may actually be past all of this this more recent period of consolidation that the market has had centered around the $1.16 price level. On the other hand, we may actually just continue to see the market do the same behavior that it's been doing in the more recent past. That is, it just tries to make a move past the 1.16 level, but then pushes right back towards it. So we may even not get the market to actually test the swing low over here, just above the 1.13 level at all, and we may just see the market push right back towards the 1.16 level, which seems to be the theme for this market for quite a while now. So we wouldn't be surprised to see some buying coming into the market abruptly, but we would still, just looking at the bearish momentum here, we may actually see the market try to test the swing low over here. Like we said, that will be a very decisive moment for this market, and it'll be interesting to see if the buyers will want to come in and take the market once again towards the 1.16 level, or we see sellers actually take this market further towards the downside and possibly resume the more longer term downtrend that we witnessed for this market earlier in the year. Okay, so next up we're going to be looking at the gold futures market. Once again, we did not see any major price action unfold for this market in terms of any strong movement either towards the upside or the downside. we've been talking about how this market seems to be really caught up between two very important support and resistance levels, one found at the 1220 level, multiple instances, actually continuous instances, where price first found support at the level and then later resistance at the level. So a very, very strong level towards the downside over here. And of course, we have a very long-term support and resistance level running right across this area over here as well. We've had a very strong swing low post off this level in the past. Then we had more indication of some minor support at this level. And now that the market is actually trying to push towards the upside here, past this support and resistance level that we drew earlier, it's now without a surprise actually finding resistance at this more long-term level over here. So we see this market actually compressed between the two levels, and that just continues to be the theme for this market, and a possible explanation why we do not see any strong price action for this market just yet. We're clearly seeing the buyers and sellers here are indecisive for the most part, and there's still a lot of uncertainty and ambiguity around whether the market here wants to break past this level, use it as support and possibly continue higher, or we're going to see the market actually push right back down towards this level, break this level towards the downside, pull back, use it as resistance, and basically re-enter this entire phase of consolidation that we saw for this market in the more recent past. Interestingly, if you recall, this entire move past this more short-term support and resistance level was actually just a knee-jerk reaction from the markets withdrawing from the S&P 500 index and related equity markets that were very, very weak, and so the investors here possibly were just loading on their long trades for the towards a more lesser riskier assets like gold. And so that is where all the buying that strong looking bullish candlestick basically came into being, and since then it's just been indecisive for the most part. So we going into this week, we expect for this action to possibly continue unless we see the market actually make a move past this support and resistance level over here, or we see the market actually basically trying to attempt to break either the ceiling over here or the floor that we've outlined over here. As long as price just stays compressed within these two zones, we see all of this consolidating and low volume activity here to just continue. Okay, so finally we look at the 10-year Treasury Note futures market. This was another really interesting market to follow last week. If you recall our analysis for this market from the week prior, we had been actually interested to see that the market was trying to push underneath this swing low and area of support, former support over here. The strong candlestick that closed actually towards the downside to us indicated that if the market tried to pull back towards this level, and this level is going to hold as resistance, we may actually see the market continue its way down and basically continue with a more longer term downtrend that we saw for this market for the most part of this year. That really didn't happen last week, of course. This market being a safe haven asset for a lot of investors and analysts as well, continued to feed on the weakness in the US equity sector. And so we actually didn't see this former support level here hold as resistance at all. We did see an initial bounce off of this level. This happened the week prior to last one, where we actually got excited that if the selling here now just continues, we may actually see the market continue its way down, given the fact that the market seemed to be holding as resistance at this level. That obviously turned around really fast. The last week we saw another attempt for the market to test this former support level that actually gave way to buyers here, and the market just continued its way higher. As of now, it's actually sitting at another interesting support and resistance level around the 119 level, which again shows enough evidence of the market here finding support in the more recent past. Now it should be interesting to see if this will actually turn into resistance at all, or we'll see the same story unfold here as it did over here, where the market was actually able to push right past. So if we do actually see a break of the 119 level this week, it might actually be an indication that the market is going to possibly re-enter this entire period of sideways trading activity, and will possibly prolong this entire consolidation phase that we've been seeing for the past several months for this market, following the sharp move towards the downside in the earlier part of this year and the later part of last year.